You filed the tax return and you owe money, and you cannot pay money by the deadline of April 15th. Can you set up a payment plan to pay the balance over time, few months, maybe even several years? Can those payments be affordable? And also, do you have to hire an attorney or tax professional to set up the payment plan? The answer is yes, you can set up a payment plan, and even if for some of the payment plans, you do not have to hire a tax professional. I am Olena Ruth, and I'm founder of Ruth Tax Law, and I will talk in this video what requirements you have to satisfy before you can set up any type of a payment plan, what payment plan you are eligible for based on the balance, and also whether you can do it without tax professional. Before you can address any proposal for the payment plan before the IRS requires you to satisfy two important requirements. Requirement number one is filing compliance. You cannot have any unfiled required tax returns before you can set up a payment plan. Thus, you need to look into the account transcripts, talk to IRS whether there are anything missing, or prove to IRS that you didn't have the requirement to file the tax return for that specific year. Requirement number two, you have to be current with your taxes. Meaning is if you're an employee, you have to ensure that all your withholdings are accurate and you do not underpay the tax from your payroll withholdings or by your payroll withholdings. Or if you are self-employed, you have to ensure that you make all the estimated tax payments. Now, there are different requirements with respect to estimated tax payments, and there is some computation based on your income or previous tax liability that you had in the previous year. But this is something that you are obligated to prove to IRS that you are current with your payments, because IRS wants to assure that you are current, and they call it also stop the bleeding. So you do not have any new liabilities, and they will take care only of their old tax balances. So as soon as you satisfied these two requirements, you're good to go. But before we'll jump into the computation, to the discussion of what payment plans you can be eligible based on the balances, I wanted just to run through a few of the terms that will help you to understand the entire video and what I'm talking about when we talk about different types of the payment plans. Basic terms that you need to know or understand in order during the discussion about the payment plans with the IRS. First, the formal official term for the payment plan with the IRS is installment agreement. That's when you look into the Internal Revenue Manual rules, and when you receive a letter confirming your payment plan from the IRS, you will see a term installment agreement. Next, when I refer to unpaid tax balance, I mean not just a tax that was shown on your tax return, but unpaid tax balance includes tax, penalties, and interest. And it is important to understand because penalties and interest continue to accrue as long as you have unpaid balance. Thus, you will see, and we'll talk a little bit like what the options you have. The longer term of the payment plan, the larger balance you will ultimately pay on that tax balance that you showed on the tax return. Now, when you know those basic knowledge, let's look into the different types of payment plans that work for you. So usually when you look likely different videos or you read on different websites of other tax professionals about the payment plans, you would see such terms as guaranteed, streamlined, regular, partial pay. I believe that they're a little bit of misleading, particularly with the recent changes that IRS makes as to their approval of the payment plans, particularly on online system. So I actually created my own summary based on the balances. So I hope this will balances and the term, which I hope at least will give you the first step to understand where you are, whether you can make, whether you can do do it yourself or set up a payment plan yourself, whether you need help from the tax professional, and how you can set up the payment plan. So I will show you my summary, how I created. So first group is short-term payment plan versus long-term payment plan. Now, IRS called short-term payment plan installment agreement plan. I don't think it's exactly installment agreement, because the way how it works, IRS allows you to pay your balance in full within a period up to 90 days or 180 days. Now, why am I saying up to 90 days or 180 days? Usually it's the first time when you request that type of a payment plan, a short-term payment plan, is IRS agree to 180 days. But then when they look into the history, if you already done a payment plan and were not successful, they may actually reduce that period of time by 90 days. But basically it's up to 180 days. Their balance limit, there's only if your balance is under $100,000. And the way how it works, when the IRS approves this short-term payment plan, you are allowed not to make any monthly payments, but you have to make a full payment within by the deadline of that 90 days or 180 days, whatever IRS sets up. I will be honest with you. I do not like this type of payment plan, particularly if your balance is relatively high, which is by around $100,000, because the way how I look at that payment plan is more like psychological delay. You believe that you resolved the problem and you believe that you have 6 months and it's sufficient time to make the full payment. However, 6 months passes really quickly, and by that time you have to pay not just the balance that you showed on a tax return, but remember, it's unpaid tax balance that includes end penalties and interest. So I've noticed that most of my clients, even though they set up the short-term payment plan, they then call me really close to the deadline asking me to renegotiate the payment plan to the long-term option. And long-term option, that overall does not have any balance limitations. It's set up by monthly payments when you make monthly payments for some specific amount. And you still can do online setup similar to the short term, but only if you balance up to $50,000. And we'll discuss it later for more. I believe this is a real solution for you. And why I think so, because you actually can set up a minimum monthly payments, and you always can make voluntary payments. So IRS does not punish you, does not fine you for making prepayments or like payments larger than your installment agreement payments that you set up with IRS. But at least you know that you have some type of a long-term solution. And if you can pay it off within 180 days, perfect. But I think psychologically it's just easier workable. It's just easy to work it out with that. Now let's talk about long-term installment agreement, and this will be based on the balances table that I created. It should give you the first kind of initial understanding. All right, so the lowest balance that I guess the easiest for the resolution is the balance under $50,000. So it is long-term plan, and you can resolve it online. So you do not have to call IRS. You actually can establish the payment plan online by opening an online account with the IRS, and I'll talk about it a little bit more. This is the best option for you that I would say do it yourself. You do not need the tax professional help unless the payments offered by the IRS are not affordable for you, and we'll talk about it later. If your balance is between $50,000 and $250,000, you cannot set up a payment plan online. Now, if you look at the best path column, I stated that call IRS or tax attorney, and tax attorney is recommended if the IRS has begun collection. Here's why. So even though you cannot set up a payment plan online, you can call IRS, and it can be relatively easy to set up this payment plan, again, by yourself. If, however, there is no collection final notice issued by the IRS. Because if there is no collection final notice issued, then you can actually set up a payment plan for the term of the collection statute of limitation without a complete financial disclosure to the IRS, which is relatively easy. And that's why I'm saying you can do it by yourself, except you have to call the IRS. Now, if the IRS issued collection final notice, then the IRS will require the complete financial disclosure, which is submitting the form 433F or 433A, again, depending on the balance. And they will also require verification documentation, such as bank statements, the copies of your expenses. It depends on who you talk to. That's why I told you that tax attorney is recommended if the IRS already has begun collection and issued final notice. Well, if the balance is over $250,000, then you have to submit the financial disclosure. And this is this is the field where I highly recommend tax attorney, because you cannot set up a payment plan online, but you have to call IRS and you have to provide the full disclosure of your financial situation. Now, summarize it. You can do it by yourself if your balance is under 50,000, under 250,000. However, that's based on the assumption that you can afford the monthly payments, because IRS computes them based on this specific period of time. It can be 2, 3, 5, 6 years. Sometimes also, as I mentioned, collection statute of limitation, which is 10 years from the assessment date. But remember, if your balance is 2 years old, then you do not have 10 years, you have 8. Moreover, there are different periods or different events that actually extend the collection statute of limitation. So that's IRS still will agree to the payment plan for the lower amount than for, specific time that mentioned in the under 50,000, 250,000. But based on your ability to pay. And ability to pay is determined based on the IRS review of your full financial disclosure. And this is where I also recommend a tax professional, tax attorney, to help you out with that. And then alternative that we already talked about it, which is a short-term option, which if your balance is under $100,000, and you also can set it up online. You can do it yourself, but as I said, I do not recommend it. As you could see, there are some options when you can set up a payment plan by yourself. And I do create those videos for you to help you out to do it on your own and determine when you actually need help from a tax professional. Now, of course, I understand you will ask, well, Olena, this is great, but why would I need a tax professional? And when I should actually consider to hire a tax professional? And I tell you, here's the different circumstances. First of all, if your balance is above $50,000, you should consider that, because that means you cannot set up a payment plan online. You have to actually call the IRS. Also, sometimes the online tool will not allow you to set up a payment plan, and that would be a red flag, meaning that potentially you have some tax returns unfiled, maybe some issues on an account. You need to negotiate an affordable monthly payment plan that as you could see, the online calculator provided by the IRS gives you specific amounts that you have to agree to based on the term of the payment plan that you choose. But what if you cannot afford those monthly payments? Then I can help you out with the financial determination and determination of your ability to pay. Also, as I mentioned, unfiled tax returns, and you need to avoid the filing of the tax lien. And this is where we come to how I can help you out with your case. First of all, I will review the IRS records to ensure that you do not have any unfiled tax returns, meaning you are in filing compliance. I will review whether you are in payment compliance, and if not, I will help you out to reach it. Also, I always review the account transcripts, which is IRS records, whether the IRS accurately assessed your taxes, because sometimes there are mistakes. Next, how much of penalties and interest were assessed and whether we can remove any penalties. Relatively easy, or whether you have any facts that will help you out to remove the penalties. Next, I will complete the financial analysis for IRS purposes. And IRS has actually specific collection financial standards. So what that means, they will not allow all your expenses. They have some specific standards for several of the expenses, such as a vehicle's operating cost, vehicle ownership cost, your housing expenses, food, clothing, miscellaneous, things like that. So I'm already trained on all the expenses and all the standards, and I will help you out to fill out the form. And most importantly, call the IRS, because even though you can set up a payment plan by yourself over the phone, I'll tell you, sometimes it's not an easy way to communicate with the IRS, and not all representatives are unfortunately trained well enough and understand what type of payment plan you want and understand all the terms that are actually applicable. So sometimes, for instance, an example, if you owe up to $250,000, but there is no collection final notice, the IRS representative to whom you talk to actually may request the complete financial statement. In other words, the tax attorney can help you out to communicate with the IRS in a professional way, and we know the rules. And then another reason is analysis of your future plan. You see, right now, when you have a balance, tax balance, you're under stress. You just want to get off your shoulders, get the payment plan, start making the payments on a monthly basis. But there are some events that you need to analyze. What if you want to buy a house in the future? What if there is a tax lien and you want to sell your house? How the payment plan will impact your ability to proceed with some type of events or planned things that you have in a year, in a two. And this is where I'll help you out to analyze your situation and determine the specific plan of action, what to do. So that's where the value of the tax attorney. And I hope this information will help you also to make your decision. The bottom line, you can do the payment plan by yourself. There is not an issue at all. Particularly, it's an easier way if you are under $50,000 and you can afford the payment plans. Definitely open up their individual account, tax account on the irs.gov, and if based on the information I provided you, you feel not comfortable to reaching out to the IRS or not comfortable negotiating financial statement, then give me a call. All the information is in the description below. Otherwise, I'll just really wish you good luck to set it up by yourself. You can do it. In the meantime, I will prepare the additional videos explaining their different types of the payment plans and the requirements for the IRS based on their balance, because this is just a general information. But there's different options that you may have even within those short threshold that we discussed. So I hope you like this video. So if you do, please give me a like, and subscribe for more. And I will see you soon. Stay tuned.